partner in CKC LLP. I'm a cost accountant by profession. Today I'm going to deliberate over records to be maintained and audited in GST. Since GST is for the first time, so we have to be very careful in respect to GST audit planning. We don't have hit and trial option here. So every professionals, whether experienced professional or new professional, have to be very careful that GST audit is done correctly. Okay, let's move to the presentation roadmap where I am going to share knowledge about inward supply records, outward supply records, goods sent on job work records, stock register records, related party transaction records, and records of returns filed. A part of these records, I will also share some knowledge about how to capture information for GST audit. But before discussing the records and a bit of audit procedure, I would like to remind you a brief about records and GST audit provision. I believe you all are aware of the same. Assessment in GST is mainly focused on self-assessment by the taxpayers. Section 35 of CGST Act says that every registered person shall keep and maintain all records at his principal place of business. Here you need not to be confused about principal place of business, as principal place of business is the place of business which is mentioned in your certificate of registration. It also says every registered person whose turnover during a financial year exceeds the prescribed limit, which is as of now 2 crores, shall get his accounts audited by a practicing cost accountant or a practicing chartered accountant. The account or records are specified in Rule 56 of GST Act. Sub-Rule 1 of Rule 56 says accounts and records shall be maintained separately for each activity. For each activity, uh, it has to be noticed here like it is given each activity. And each activity includes manufacturing, trading, and provision of services. Inward supply records. Inward supply records, this is also said records for input tax credit. We have to maintain records for inward supply as purchase of raw material register separately from registered dealers and from unregistered dealers, and purchase of traded goods separately for the purchase from registered dealers and from unregistered dealers, and purchase register for domestic services, and it has also to be separate for the purchase from registered dealers and from unregistered dealers. Register for import of services, it has also to be separate, like we have to pay GST in reverse charge mechanism on import of services, so it has also to be separate register. Register for purchase of consumables or expenses on which input tax credit is to be claimed, it should be separate register. And register for purchase of consumables or expenses on which input tax credit is not to be claimed. And again, register for purchase of consumables or any expenses, it should be separate for the purchase from unregistered dealers and for purchase from the registered dealers. And register for purchase of capital goods, it has also to be separate. To conduct GST audit of inward supply, we have to obtain HSN code of inward supply, list of domestic services received and imported services received. Also cross-verify these information with trial balance. Check whether any goods or services received are under reverse charge. If so, check whether tax liability of reverse charge is paid through cash ledger or not, as liability of GST under reverse charge cannot be paid through credit ledger. It must be paid out of cash ledger. Obtain list of raw material receipt or purchase register. Check control system of client. Pro rata credit is taken in case of short receipt or partial quantity rejection, as input tax credit is not available on materials rejected, destroyed, or short receiving. Obtain vendor or supplier list. Check invoice of all such supplier whether invoices has been prepared in accordance with GST law mentioning GST number of client. Check reversal of input tax credit if payment is not made to supplier within 180 days as per Rule 37. For this, we have to obtain aging report of supplier from client. Aging report is the report on which number of days are mentioned within which payment is made. Check reversal of input tax credit as per Rule 39. Reduction in input service distributor credit on receipt of credit note from ISD distributor. Check reversal of input tax credit as per Rule 42. Reversal of input tax credit on input goods or services due to exempted supplies or not used for business purposes. Check receipt of these goods or services and input tax credit status. Check reversal of input tax credit as per Rule 43. Reversal of input tax credit on capital goods due to exempted supplies or not used for business purposes. Check receipt of these capital goods input tax credit status. We have to keep separate records of input used in supply of each exempted goods or services because input tax credit is not available on supply of exempt goods or services. If input service is not identifiable on an individual exempt goods or service, for example, capital goods producing both exempt and taxable goods, or rent of factory, etc., then use pro rata to reverse input tax credit. Already mechanism of reversing input tax credit is available. Check status of claim and reversal of blocked input tax credit claimed as per section 17(5). Check input tax credit status. For example, cab services, food and beverages, and life insurance purchase, or club membership, or works contract services, or any construction services. Check reversal of input tax credit on excess credit taken due to an error by a registered person on carry forward of Synovet balances from old regime in TAN 1. Check credit taken in TAN 1 with respect to last returns filed under old regime. Return compliance in last 6 months prior to 1st July 2017. Check reversal of input tax credit on excess credit taken due to an error by a person who was not registered under old regime on stock held on 1st July 2017 in TRAN 2. Verify tax credit taken on stock is not older than 1 year as on 1st July 2017. Outward supply records. Outward supply records, which is also records for tax liability. In records of outward supplies, we have to check whether records of tax invoices are available and maintained serially, and records of bill of supply for supply of exempt goods or services are available and maintained serially. Credit note serially maintained, debit note serially maintained, receipt voucher serially maintained, refund voucher serially maintained, and goods sent free of cost as sample or gift. And we have to check also records of goods sent on approval basis on delivery challan, records for related party supplies. Audit of outward supply. To conduct GST audit of outward supply, we have to check whether supply of goods or services correctly classified as per HSN or SAC code classification list. Check applicable tax rate according to HSN or SAC code. For this, sort outward supplies on HSN or SAC code and check whether GST rate has been applied uniformly except if there is any reduction or increase in GST rate. Yes, this is better way to sort outward supplies on HSN or SAC code to check whether GST is uniformly applied or not. Check invoicing procedure of taxpayers and correct GST is charged or not as per place of supply. Yes, we have to check also place of supply. Check related party transaction and its valuation procedure. Its valuation procedure is important. Check valuation of outward supplies as per Rule 27 to 35 of GST rules rule as applicable. Yes, whatever the supply is made, we have to check the valuation of those goods or services supplied by the client. Check delivery challan. Check delivery challan details issued for supply of semi knocked down goods, free of cost goods, free samples, gifts or branch transfer within a state for the same GSTIN. Check non-refundable gate passes. Check check removal of goods for testing, scrapped or otherwise a sample. Check whether GST is applicable on that and paid. If not paid, then input tax credit reversal to be checked. Okay. Goods sent on job work records. Records of goods sent on job work includes delivery challan, delivery challan details for sending and receiving the goods, records of rejection, scrap at job workers end, capital goods sent for job work, delivery challan details for sending and receiving the capital goods, and also we have to check records of dies, molds, jigs and fixtures provided by the provided to the job worker by the principal. Also we have to check records of rejection, scrap at job workers end. Audit of goods sent on job work. We have to check returnable challan for job work. Check ITC4 has been filed regularly every quarter. Check pending challan is less than for 360 days for input supplied to job worker and 3 years in case of capital goods. Check whether stipulated time for return of goods sent on job work is expired. If stipulated time, that is 1 year in case of inputs sent to job worker for some processing and 3 years in case of capital goods is expired, then list out all such pending challan. It should be quantity wise, HSN code and value wise for computation of GST and interest on the same to be paid. Interest should be calculated from the date on which goods initially sent to job worker. That is the date of sending goods to job worker for processing of goods. Interest will be charged from that date. If 1 year or in case of capital goods 3 years is expired. Audit of goods sent on approval basis. Sales subject to customer approval must be accepted or returned back within 1 year. Sale subject to customer approval is sent on delivery challan. In audit of such supply, check such challans is not more than 1 year. And if goods were sent in previous regime, then time period shall not be more than 180 days. List out such challans for determination of tax liability and interest. Currently, interest rate is 18% per annum, that is 1.5% per month. The interest has to be calculated from the next day on which tax was due. Stock register. This is again a very important register from both records and audit perspective. Stock register records if taxpayer is a taxpayer. Every registered person manufacturing goods shall maintain periodical records of raw material consumption showing quantitative details used in manufacture as opening balance of raw material and other inputs, receipt of raw material and other inputs, less raw materials and other inputs consumed in manufacture or production, less raw material and other inputs lost, stolen, destroyed, written off or disposed, less scrap, byproduct and wastage thereof. Then you will find closing balance of raw material and other inputs in hand. That is in balance. Input tax credit is not available in case of raw material or inputs lost, destroyed, written off, or disposed of. Every registered person manufacturing goods shall maintain periodical records of input services received showing proportionate value of such service utilized and applied to a product in manufacturing activity, that is taxable goods production, exempt goods production, and goods supplied as free sample, free of cost, etc. Input tax credit on input services used in manufacturing of goods are usually common for taxable and exempt goods or otherwise, so input services should be applied on individual manufacturing of products on pro rata basis. For example, a machine can produce both taxable and exempt goods, so input tax credit on purchase of such machine should be applied on individual product on pro rata basis. Finished stock register for manufacturer of goods. Every registered person manufacturing goods shall maintain showing quantitative details of goods manufactured as opening finished goods manufactured during the month, less finished goods lost, stolen, destroyed, written off, or disposed, less finished goods supplied free of cost as sample or gift, less finished goods supplied, and then we will find closing finished goods in balance. Again, it is to note that input tax credit will not be available on raw materials which are consumed in the production of finished goods which are lost, stolen, destroyed, written off, or disposed of. Or whatever the finished goods are supplied free of cost as sample or gift. Input tax credit will not be available on the input purchase used in the production of such finished goods. A stock register in case of service provider. If client is service provider, every registered service provider shall maintain accounts details showing details of services utilized and quantitative details of goods used in provision of service. If service provider is using some quantity or any other input services for providing output services, then they is also required to maintain a stock register of goods, each service-wise detail of input goods in stock to be maintained. It should be in the same format as opening balance of goods used in provision of services. It should be in quantity and value, and plus purchase of goods minus goods lost, stolen, destroyed, minus goods used in provision of that output service. Then you will find closing balance of goods in hand. It should be in quantity and value. A stock register for traders. Audit of traders are relatively easier than manufacturer of goods. Every registered trader of goods shall maintain accounts details of each goods traded showing quantitative details of traded goods with value as followed. Opening balance of traded goods plus purchase of traded goods minus lost, stolen, destroyed, written off of traded goods less traded goods supplied free of cost or sample or gift less traded goods sold. Then you will find closing balance of traded goods in hand, and these should be in quantity and value. On the next slide, related party transaction records. Maintain records of related parties transactions separately. Maintain valuation methodology in accordance with GST law. Here a bit I will discuss about uh, which are the person uh, who shall be deemed to be related party. Persons shall be deemed to be related if they fall under any of the categories below. An officer or director of one business is the officer or director of another business shall be considered related party. If business are legally recognized as partners, or an employer and an employee, And if any person holds at least 25% shares in another company, either directly or indirectly, shall be considered related party. One of them controls the other directly or indirectly, shall be considered related party. They are under common control or management, or the entities together control another entity, or they are members of the same family, are considered the related party. Records of returns filed. You all are already aware about the returns in GST in regards to GSTR return. To audit records of returns filed, check all GSTR 3B returns and liability and input furnished in it. I mean input tax credit furnished in it. Check all GSTR 1 return filed and it is matching to GSTR 3B or not. Check all amendments in invoices in GSTR 1. Check invoice serial document numbers and challan serial numbers are properly recorded in GSTR. Check all input tax credit is claimed correctly and reconcile input tax credit furnished in GSTR 3B with GSTR 2A. Check all liability in reverse charge is paid through cash ledger. I have already said liability in reverse charge cannot be set off through credit ledger. It must be paid out of cash ledger. Okay, friends, GST audit time has started, and we all are preparing for the same. And I hope this small effort from my side must have been gainful to you. And if you think my knowledge sharing was for some benefit of your knowledge, then you can subscribe my channel and you can share my video and like this video. And I would like to thank you for your patient listening. Thank you. Thank you very much. Keep watching and keep enjoying.